Any dialogue between a regulator and the industry is good, and I think it sets the tone in terms of what they're thinking about. I think there are a number of aspects that are clearly of interest. First off is the situation with regard to all-in-one fees. I think a number of asset managers have been suggesting this should be the case for a long time, and I think that will be viewed as a positive move. Secondly, clarity about outcomes for investors. I think as an industry we've probably been guilty of having too bland objectives in respect of funds, so I think further clarity is necessary, although I worry that that will lead to a whole massive dispersion in sector analysis, for example in the UK in the investment association sector, so we may have to rethink some of those. The issue with passives, I think we're just in the middle of a change, and if we were having the FCA report a year down the line, we'd see a very, very different picture. I think passives are being incorporated much more in portfolios on a core and passive, core and satellite type basis. And I think the FCA's criticism of active managers not adding much, I think, well, yeah, the evidence is probably there, but I think we're in the midst of a market which has been probably the most difficult of all time for active managers. I still believe that over time active managers will outperform in the right circumstances, but what it is rightly suggesting is there is a natural repricing of active management. And then finally, about how funds are sold or intermediated through the intermediary platform, I think again, post-RDR we'll see a natural evolution of that, and I think we're very much in a transitional phase.